Welcome to Bull and Bear Education. Our goal is to educate the stock market trader and make you better at it. More education gives you more information. More information can lead you to being able to apply that education and that information to become more successful. That's the goal of every educator, to give you information that you can apply. So let's get right into our technical analysis. Today's ticker is SPY, or at least the first one that we'll be looking at is SPY. Now, normally I do my technical analysis live where I have no opinion going into it and I form it while I'm talking. However, today I was doing that and it would taking me too long. So we're just going to skip to what we have here. So you right now are looking at the weekly chart. Normally we look at the 1-day chart. However, the 1-day chart does not give us enough information right now. How do I know that? Well, let's take a quick peek at it. All right, so a quick peek at the 1-day chart shows that we had a move, we completed the move, we came back down, and now we're back at the move. So that doesn't really give us enough information as far as what could be the next movement in this trend. You're either A, going to continue down, or B, this is going to be a double bottom and you'll bounce back up. That's as simple really as it is. Either you continue back upwards because this is a double bottom, or you continue down. Now that seems like not a genius technical analysis, but here is where you get more information. We go to the 1-week chart. Now with the 1-week chart, we can put a retracement level here and we can see a much wider time frame. So from our COVID lows to our J-Powell special pump high, this is our Fibonacci retracement. And we are approaching the 50% level somewhere around 350. Now if you look over here, 350 served as resistance and resistance again and resistance again, and we actually gapped up over it in terms of the weekly candle. The weekly candle, we gapped up over it. So what would I say for our direction? I would say our price target would be 350. The current price is 363.38 on the daily close. All right, so 363.38 is our current price. Our price target would be 350 and whatever change, 350.79. Let's call it 351. So 351 is our price target. Our stop out would be a close above this Fibonacci level of 38.2. It also 382, excuse me. Well, 38.2 and also 380 is the price. 38.2 is the Fibonacci percentage level. 380 is the price. So that level is also relevant because it's where our current EMA is for the 5-week moving average, the exponential moving average. If we were to close above that on a weekly time frame, I would say, you know what? Probably this was indeed a double bottom and we are back up, because just because the price goes from, let's say, 363, which it is currently, to 375 does not mean that the bulls have reclaimed it. It just means that, hey, they stopped the bleeding, because look at this. You have had on the daily chart 1, 2, 3, 4, 5, 6 consecutive red days. If the bulls manage to get 2 green days in a row that get us to 375 or 372, that's not really a big deal. But if the bulls get enough red days in a row to push us back to what by then would probably be the 10 EMA, because those green days will lead the 10 EMA to rise back up above its current position of 377, probably to around 380. If the bulls can get that, and then also that could possibly get this MACD to cross back up. If the bulls can get some bullish momentum going on the daily, where the MACD on the daily crosses, or they cross above the 10 EMA on the daily, then I would come back to this weekly chart and I would say, okay, they got it above 380. And by getting it above 380, then let's take a break. Let's take a breather, cut the position, reevaluate. How it is currently though, I would say our goal is 350. So how I would play this is I would get one of the leveraged tickers that trade SPY, one of the leveraged bear tickers, SPXS, something like that. And I would say, this is going down. Let me get a November contract for SPXS, and I will just simply wait it out. 350 is my goal, so I'll get something that's not too far out the money for SPXS, and I will wait it out. That would be how I would trade this. So that's the bull target, excuse me, the bear target, 350. The stop would be a close on the weekly above this 32.8 retracement level, which is 380. And then from that point, we can reassess for a bull entry. That is my official analysis of SPY on the weekly and daily time frame. Just some other information I want to throw out there for you quickly. If you look at the weekly indicators for MACD, MACD has crossed down. If you look at it for TTM squeeze also negative. Let's keep it moving. The DMI, which is very relevant in this case. The black line represents total momentum. The black line is total momentum. Anything above 30 is relevant. It's reading at a 29 right now. You can see that in the top left corner. It is reading at 29.5. The red line is bearish momentum overall, and that is reading at 32. The bears have this for the week, in the week perspective. The bears have this weekly and the bears have this daily. Until the bulls can definitively change this, I would not reach for it. It is okay if you end up taking a loss because playing the bear side, because you played the trend. You did not fight the trend. The goal is not to be the guy that say, hey, this is the bottom. Shoom, I'm gonna fight it. I'm gonna fight this trend. I'm gonna catch the bottom and I'm going to go. Yes, you could have a double top. Excuse me, a double bottom. Double bottom is a possibility. Here and here would make a double bottom. But the trend is your friend. If you want to be the guy that gets double bottom, go ahead. Or if you want to be the guy that waits until we break 360, and then that double bottom theory is rejected for the most part, or maybe 358, that way you know for sure is rejected, that is also fine. But right now, my price target would be that 351 level, just above the 50% retracement on the weekly, and just above the psychological level of 350. All right, so let's move on to our next ticker, which will be the fabled Tesla. Now, Tesla, we will start off by looking at this on a daily perspective. All right, so from the daily chart, ticker symbol Tesla, or ticker symbol TSLA, which is Tesla. This is in a very interesting space. Your price action is pretty jumbled. You've had downward movement, then you had a green candle that was still gapped down, but then came to close above the previous close, and it wicked massively before failing as well. And then you had another gap up. So your price is jumping all over the place, but overall, and it's wicking every single day, but it's not holding its momentum. So Tesla will go the way of the market. It might fight against it a little bit, and you will have some intraday movements, But overall, Tesla is going to go the way of the market, and I believe that it will continue to go down. A good level to see would be this level right here, where you have these two wicks that came back up around 265. That would be a good price to test or to target if you were a bear with the current price. If you were a bull, you would want to get an entry above this 289 level, so this 290 level. And the reason why you want 290 above that is because if you can get a daily candle that's going to close above 290, not just wick, but you know it's going to close clearly above 290. You know that. You have your 20 and your 10 EMAs there on the daily chart. You also had a wick that was unable to reach there, so you'd be above that. And you had a candle that found support there as well. So if you can get to, let's say, a close that's going to be 291 on the daily, that would be a great bullish entry, because then Tesla has established a thin footing and can start to build itself some momentum. Ideally, you would want 293 because you really get support, because these candles had support at 293, and then 293 played resistance here. It played support here. So ideally, you would want 293. But if you felt like you wanted to try to stick your foot in at 291 or 292 because you think it might gap up above 293, I could understand that. So the bull would want to enter in at 293. The bear would want to continue riding down with the price target of 265. The bear should also consider stopping out if a daily candle closes at 293, given the current price of 283. Hey, here is your friendly reminder to subscribe, like, comment, and share this video. And we're going to do one more bonus ticker, and the ticker I selected is AMD. So AMD Semiconductor, the microchip company. The reason why we are doing this is because, you know, people love trading semiconductors. All right, so this is the daily chart of AMD, and if you look at it, I mean, it's not really overly impressive. It's beneath its averages, its exponential moving averages. I mean, it's kind of close to the 5. That's true, but until this proves otherwise, assume it is bearish. All right. If it closes above the 5 EMA, then okay, maybe it's found some support here, maybe, but the 5 EMA is the least significant of all of the EMAs, so take that with a grain of salt. But hey, if it closes above it, it might start a little run here, maybe, but I doubt it. What I would look for is the MACD to cross, my TTM squeeze to cross, and my directional movement average to get down to 15, because it's basically at 30. So 30 means strong trend, and with the with the bear indicator being at 38, strong trend to the bear side. So what I would do is wait for this to get to about 15, and the bull and the bear indicators here to cross as well. Waiting for confirmation is not a bad thing. All right, but currently the trend is your friend. Trust the trend. So if I were to say go in bear right now, I would not want to stop out of my bear position until I can make this MACD cross at bare minimum, or these TTM squeeze reverse. That would be my stop. That would be my stop if I was a bear who entered in now, and if I'm a bull, that would be my entry. If I'm a bear who entered in now, when would I take profits? Oh, I really can't even give you that information, because look how far back you have to go to find a decent level. To find when this was the same, when the AMD was at the same level. You have to go all the way back to July of 2020. So what would I assume to be a great level to take profits at if I was a bear now? Well, we don't know what's going to happen here. I mean, this is a gap that's never been filled, so hey, it'll probably end up filling this gap down to 61 because the gap has never been filled. And this gap actually is getting filled right now. So, and it's been filled obviously because the price is currently here. So believe you me, other people have their eyes on this gap, and I would say the price target would be around 61.75. Whatever fills this gap, that would be my current price target if I was a bear. And I would scale out there and just keep on keeping on to see what happens. That is my official analysis for the daily chart of AMD.